Hi, Harry here with the Rant on February 21st. You know, I tell people I would be good at telling presidents when it's a good time to run or be in office. I remember Bill Clinton used to say, after his presidency in the 90s, that I didn't have a great enough financial crisis to go down as a truly great president. I'm like, Bill, I feel your pain. Come on. He had the best 8 years of any president in history, what I could see. We had the baby boom, largest generation right in the middle, their spending cycle, their technology cycle, full blast, tech bubble and all this sort of stuff. And he will always go down as a favorable and a good president because he was in good times. And I'm not saying he didn't do anything wrong. I'm just saying it helps to have the economy behind you. And Ronald Reagan walked into a recession in the early 80s, which he couldn't be blamed for because it was already starting. And by the time he comes out, we have the baby boomers driving up the first part of their boom, 83, 84, and he got easily reelected. Now, I can't say the same for the good old Donald here. He is walking in, to me, partly favorable because the millennial generation is kicking in now, 2024 forward, but we never cleaned up the debts and the financial bubble and everything from the baby boom and then the massive, unprecedented $27 trillion I've been harking about. Nobody's put a number on that I've heard from me, but 27 trillion going on 30 because we may have now pulled back on the monetary stimulus, but we're still full blast on the deficit. So he's walking in. The economy has been overstimulated now for 15, 16 years. And the longest period, if we don't count the very brief COVID recession, and I don't count that as a recession, okay? This is 16 years. The longest we've ever gone without a recession is closer to 10 years. Now we're talking 16 years. So what I'm saying, folks, is the odds of us not having some sort of major stock correction and likely a recession in the next 4 years is low. So if Donald Trump's walking into this and it starts getting bad right away, like soon, he probably won't get blamed like Reagan did. But if he's in here for a half year more and he puts on tariffs, which are a known economy hurting the economy, and tariffs were a main symptom and part of the 1929-32 crash. They did not cause that whole crash, but they were one of the triggers. And so putting on tariffs here is dangerous. And it will end up looking like, if the economy goes down this year, which I most expect, that maybe Donald caused this with his tariffs. And the truth is this downturn is way overdue, 5 years overdue. First downturn, 2008 to 9, should have lasted into 2010 with natural cycles, with the Generation X down for 12 to 14 years, and then we should have had a finale from late 2019 into late 2022 or 23, and then it should have been over by now. But we don't because of all this 27 trillion and still going in stimulus, okay? So where are we now? It looks like to me we're in a very kind of tricky topping process, because I have to sympathize with the markets here, because I don't know what anybody would make of this thing that's been so overstimulated and yet has slid over what could have been the Great Depression of 2008 to 2022. So what I'm looking at now, things do look toppy. It does look like we're in a kind of step-by-step topping process. Bitcoin so far peaked at 108,000, a little over that, and has come down substantially and bounced a little bit. I think it went down to about 90, 91, 92. Now it's bounced back up to 96 or so and 98 here recently. Is that a top or not? It looks pretty toppy, but I will tell you, on the normal 4-year crypto and Bitcoin cycle, we should have had the big rally from late 2024 into this year, into late 2025, and we had it a year early in 2024. So there's two scenarios here I'll cover more and keep covering in the newsletter, that we're having an early top on the 4-year cycle so we can have a longer, bigger downturn in line with what I see is a 12-year major, larger 12-year wave up that's going to have maybe more like a 2-year correction instead of the normal one. So Bitcoin's got two scenarios. It could run up one more time this year to 140 to 150,000. That would be the target. Or it could have peaked and it could be going down early and could start going down this year and keep falling all the way into late 2026. And the target there would be about 30,000. Although it could be as low as 16,000, but at 30,000 would be my favorite target. And again, I'll be getting it out and covering that more in the newsletter. And as you know, I'm always looking at Bitcoin as the best leading indicator for stocks and other things. Gold is also looking very peaky here. Gold tends to and it did this in 2008, tends to go up into the crisis, seeming like a safe haven, and continues to edge up in the early stages, and then goes down in the end when everything falls, and that's what it did last time. But gold and and the treasury bonds together, I'm showing more in my newsletters and stuff and coverage. If you put those two together, gold kind of holds up better in the first part of the crash, and it's the treasury bonds, TLT, that explodes at the end. That means they're the ultimate safe haven. So having gold, people holding gold, I think you can hold gold into the early stages of this downturn and then start transitioning increasingly into the treasury bonds, TLT, because they really show themselves at the end. So everybody's always writing in, TLT is the only thing that really goes up in a major bubble, and everything bubble bursts like this. But it only shows itself. 80% of it's going to be shown in the late stages. So you have to be patient with this, okay? MicroStrategy is kind of a key bubble stock to look at. It tends to be leading on the way down here. So Bitcoin has already started to crack. That's a good sign. If it makes a new high, that's a sign. Well, that's not a good sign. It means it may have its normal 4-year rally into 2025, and that would mean stocks have got to go sideways to up as well. So this is tricky here. I'm still looking at Bitcoin. Nvidia is retesting its highs here. If it can't break through that, since it's the leader in AI, so crypto and AI are the two leading sectors here, and so I'm looking for weakness in those. So I don't want to see Nvidia make new highs. If it does, it means, well, maybe we're not topping quite yet. If it turns around and cannot break through these recent levels, 149, whatever it is, then that's going to be bearish as well. So again, be patient with the treasury bonds and TLT. You can get in them later if you want, okay? I mean, and things are so confusing now. It wouldn't be that terrible to be in T-bills, and then, and if you're in gold is a hold here. And then we can move in increasingly to TLT. On the other hand, people out of stocks and don't want to be in cash, well, TLT is still going to be trending up and should be the best performer in the end. And boy, that's going to really pay off when everybody's losing on everything, and you're one of the few people that's in the treasury bonds or TLT. You're going to look very, very smart and be very, very happy. So that's what we're at. I mean, I'll just have to keep you updated on this. I do think we're topping here, but it's got to start showing itself pretty soon if 2025 is going to be the first wave down. And remember, and I've done unique research on this, looked at every bubble in modern history, the first crash tends to be 30 to 50%, and more likely 42% on average. And this one should be closer to the 50%. In the first crash, in the first 6 to 12 months, you should get the worst hit. So people are saying, well, I'll wait and see. That's the problem with bubbles. They build, they accelerate the most at the end, and they crash faster sooner than normal bull markets. So you really have to be more on the safe side here. And again, I will keep you updated.